All right, let's get right into it. For the first time in what feels like a very long time, there's something different in the air, a real tectonic shift that I believe could completely rewrite the next chapter for the EUR USD. And look, this isn't just another blip on the radar, not another weekly fluctuation. This is a potential sea change, the kind of major turning point that can define a trader's year, or even their career. So let's break down exactly why this moment is so absolutely critical.
You know, this one is for you, the resilient traders, the ones who've been in the trenches, navigating these incredibly tough markets. For months now, we have been grinding through a brutal downtrend. It felt relentless, didn't it? We all watched the US dollar, pumped up by aggressive rate hikes, just steamroll everything. Meanwhile, the euro was getting hammered by, well, you name it, geopolitical fears, inflation, all of it. Every time you tried to buy, it felt like leaning into a hurricane, and the market, rightly so, punished that move.
But here's the thing we all know deep down. The market is never a straight line. It just isn't. Every single trend, no matter how strong it seems, it carries the seeds of its own end. The market breathes in and out in cycles of fear and greed. And just like the absolute darkest moments of past crises gave birth to incredible new opportunities, all the evidence is now pointing to the fact that we are standing at one of those exact inflection points right now.
So let's talk about the turning tide. What started as just whispers of change, well, now it's starting to sound like a roar. We are watching the Euro-USD break out from its long, painful downtrend. And let me be crystal clear, this is not just some minor bounce. This is not a bull trap set for rookies. What we're seeing is a fundamental fracture in the market structure. It's a loud and clear signal that the entire dynamic of who's in control, the buyers or the sellers, is shifting. Let's dig into the proof.
First, and honestly, this is the most important piece of the puzzle from a technical point of view, the market structure is broken. Think about it. For months, the trend was defined by one simple, repeating pattern: lower highs and lower lows. It was a predictable, painful drumbeat. Every rally failed, every drop went deeper. But now, that sequence has been shattered. The chain is snapped. The price has refused to make a new low and is now pushed decisively above a key previous high. This is the first non-negotiable sign that the bears are losing their grip.
Second, that wall of resistance, that ceiling that has slapped down every single rally for months, has been pierced. And you need to think of this level not just as a line on a chart, but as a psychological barrier, a place where all the selling pressure was concentrated. And now it's been broken. And this wasn't some timid little poke either. This was a powerful, confident move, with strong candles closing firmly above that old ceiling. And as we know, in the world of trading, there's a beautiful rule. Old resistance becomes new support. That former barrier, well, it's about to become the new floor.
And finally, we have momentum. A breakout without real power behind it is just a fake out waiting to happen. But this move has fuel in the tank. We're seeing volume pick up, which tells us the big players, the institutions, are getting involved. The bullish candles are long, they're strong, they're closing near their highs, all signs of control. And crucially, the first higher high has been officially printed on the chart. That's the cornerstone of any new uptrend. This isn't just market noise, folks. This is the footprint of serious capital re-entering the game. You see, a breakout is so much more than just a price move. It's a deep psychological event. It is that exact moment when the conviction of all the sellers just crumbles. It's when a whole cascade of their stop-loss orders get hit, forcing them to buy back their short positions, which then adds explosive fuel to the rally. It's a chain reaction. This is when FOMO, the fear of missing out, starts to creep in, and all that money sitting on the sidelines starts to get pulled into the market. The balance of power isn't just shifting, it's a landslide.
This all reminds me of this legendary trader I once knew about. Her name was Alexandro, but people called her the Phoenix. Years ago, during a very similar turn in the UR/USD, almost everyone was still bearish. The news, the sentiment, everything was negative. But she said something that has stuck with me forever. She said, "The market doesn't ask what you think. It only asks if you can see what it's doing." While everyone else was busy arguing about why the euro should go down, she was just looking at the charts. She was seeing the evidence, and so she bought with discipline, and she rode that new trend for thousands of pips, while the crowd was left behind arguing with reality.
Now, to really understand just how big this could be, we have to look back. You know the saying, history doesn't repeat itself, but it sure does rhyme. Major market turns almost always happen in conditions that look an awful lot like what we're seeing today.
I mean, just think about it. Go back to 2008. The financial system was supposedly collapsing, headlines were screaming apocalypse, and right then, a massive new upcycle for the Euro-USD began. Or 2015, when the ECB started printing money like crazy. The obvious trade was to short the euro, right? Well, that led to one of the biggest short squeezes in history. And who could forget March 2020? The world is locking down, total chaos, and a generational buying opportunity was born. Even in 2022, with war in Ukraine and everyone predicting the euro's demise, that's where the pair bottomed. The pattern is undeniable. Peak fear has consistently been the launchpad for powerful new trends.
And this brings us to a harsh but really profitable truth about the markets. An estimated 90% of traders are on the wrong side of the market at these huge turning points. Now, why is that? It's because big trends are never born out of consensus. They are born in doubt, they grow on skepticism, and they finally mature into widespread belief right around the time they're about to die. So the fact that a lot of people are still skeptical about this current move, that shouldn't worry you. That should be seen as confirmation.
Okay, so seeing the breakout on the chart is step one. That's the easy part. But actually capitalizing on it, that requires mastering something much, much harder. The battle that goes on between your ears. To ride this new wave, you have to switch your entire mindset.
Really? There are only two ways to approach this. You've got the FOMO mindset, which is all about emotion. It chases price after it's already taken off. It buys at the top out of excitement and sells at the bottom out of panic. Its biggest fear is missing a winning trade. And then you have the hunter's mindset. This is all about patience and process. The hunter waits for the perfect setup to come to them. They act on a plan, not an impulse. The hunter doesn't fear missing a move. They fear a bad entry. They trust the data, not the noise from the crowd.
So, it's time for some brutal honesty. You have to ask yourself these three questions. 1. Do I have the patience to let the price pull back to a good level, or am I just going to chase this green candle out of anxiety? 2. Am I ready to define my risk on every single trade with a hard stop loss, accepting that small losses are just the cost of doing business? Or am I just gambling? And 3, is my belief in this new trend actually based on the evidence we just talked about, or is it just a fleeting emotion that's going to evaporate the second the market pulls back?
Okay, so we've seen the evidence, we've looked at history, and we're working on that winner's mindset. Now we need a plan, an actual actionable plan. Because having a bullish bias without a strategy to execute it is frankly worthless. This is where the pros separate themselves from the amateurs.
So here's your game plan. First, you identify the new support levels. The most obvious one is that old resistance level that just broke. Second, you wait. You patiently wait for the price to pull back to these levels. These pullbacks are not a reason to panic. They are a gift from the market, offering you a much better, lower risk entry. Third, as the price dips, you watch the price action closely. Is the selling volume weak? Are buyers stepping in and creating wicks on the candles? This is how you confirm that support is holding. And always, always remember, corrections are just the market taking a breath. They are healthy, they shake out all the weak hands and build a stronger foundation for the next leg up. Ultimately, what we're trying to do here is not fight the market. We're not trying to chase it down the street. We are trying to learn its new rhythm, its new dance. A truly great trader moves in unison with the market's flow. They're like a surfer reading a wave, anticipating its natural ebbs and flows. This is the art of trend following, and it's an art built on patience, not on aggression. We've covered the charts, we've covered the history, we've covered the psychology, and now we get to the most important part of all. Because this isn't just some abstract analysis. This is about a specific moment in time, a rare window of opportunity. And ultimately, it's about your decision. If you take away nothing else from our time together, I want you to burn these 3 things into your mind. Number 1, the trend has shifted. The facts have changed, so your bias must change too. Stop looking at this market through last month's bearish glasses. Number 2, opportunity waits for no one. The train is leaving the station. Indecision is a decision. It's the decision to get left behind. And number 3, discipline is your anchor. In the emotional storm of trading, it is the only thing that separates consistent profit from a lucky guess.
You know, years from now, traders are going to look back and talk about this moment, the great Euro-USD turn, just like we talk about 2008 or 2020. And that history, it's being written right now with every single tick of the price. So the only real question is, what's your role going to be in that story? Are you going to be the one who reads about it later with regret, or are you going to be the one who tells the story of how you saw it coming, you planned for it, and you were a part of it?
I want you to imagine you're standing on a beach, looking out at a great ocean. After a long, quiet period, you see it. A powerful wave is starting to form out on the horizon. You can feel the energy building. You can see its potential. And right now, you have a choice. You can stay safe on the shore, just be a spectator and watch it roll by. Or you can grab your board, paddle out with discipline, position yourself correctly, and ride that wave further than you ever imagined possible. The market is asking you that exact question right now. When this wave rises, will you stand on the shore or are you going to ride it to the horizon? The choice is yours.